All right, let's jump straight into it. Today's explainer is tackling an absolute powerhouse in the crypto space right now, real-world assets, or RWAs. And honestly, you can't talk about RWAs without talking about Ondo Finance. They are literally building the bridge connecting traditional Wall Street directly to the Web3 frontier. Just look at the sheer scale of this. The tokenized real-world asset market has completely exploded to a staggering $37.5 billion. That is massive. We're not talking about some fringe crypto experiment anymore. This sector grew by over 100% in just the last year alone. It's totally rewiring how global capital flows and settles. But think about it. How do you actually do that? How do you take highly regulated, traditional U.S. treasuries and put them safely and compliantly onto a blockchain? It's a massive regulatory headache, right? You need extreme compliance, but you also want the blazing speed and transparency of decentralized finance. Well, that right there is the exact puzzle Ondo decided to solve. So to unpack this multi-billion-dollar ecosystem for this explainer, we're going to hit 6 key areas: the RWA boom, Ondo's core products, how Wall Street is meeting Web3, the big catch with their tokenomics, the looming 2026 token cliff, and finally, the ultimate bull versus bear outlook. Starting with Section 1, the real-world asset boom and the tokenization of traditional finance. Get this, Ondo currently commands an unbelievable 70% market share in globally tokenized stocks and ETFs. Just let that sink in for a second. In a space that is absolutely flooded with hungry startups and legacy tech giants, one single protocol is eating the lion's share of tokenized equities. They aren't just playing the game, they are defining the rules. We're talking about nearly $3.8 billion in total value locked across 13 different blockchains. That's real, actual user funds. They've built out infrastructure connecting over 170 asset issuers, processing a mind-blowing $18 billion in cumulative trading volume. It's a total juggernaut. Moving into Section 2, Ondo's 3 core products, which act as the bridge to DeFi. So how do they actually capture all this value? It's a really smart 3-pronged attack. First up is USDY. That's a yield-bearing stablecoin backed by U.S. Treasuries, holding over $2.7 billion in value, specifically built for the DeFi crowd. Next is OUSG, a strict institutional fund holding nearly $700 million. And finally, global markets, bringing over 260 tokenized U.S. stocks and ETFs to non-U.S. retail investors. It is the whole shebang. And the actual user journey? Super smooth. Take USDY, for example. Instead of jumping through hoops with legacy brokers, eligible users just pass a quick KYC, deposit a stablecoin like USDC, wait out a 40 to 50-day processing window, and boom, they mint USDY tokens. Tokens backed by literal U.S. government debt, ready to be deployed across DeFi. It's traditional yield with Web3 utility. All right, Section 3, Wall Street meets Web3. Let's talk institutional heavyweights. You want to talk about credibility? Look at the names backing these guys. Ondo is actually the single largest application recipient of BlackRock's Build Fund. No joke. Plus, they recently teamed up with MasterCard and Ripple to pull off a cross-border treasury bond trade that fully settled in under 5 seconds. 5 seconds. They aren't just dipping their toes in. They are actively laying the pipework with global financial titans. And they are aggressively expanding that technological footprint. They are pushing all this TradFi infrastructure across multiple blockchains. By launching on high-speed networks like Solana and tapping into Cosmos via Noble, they're guaranteeing these assets trade with the blazing speed and dirt-cheap costs that crypto natives totally expect. Now for the reality check. Section 4, the tokenomics catch and the battle of governance versus revenue. Okay, so despite the billions in TVL and these crazy Wall Street partnerships, there is a massive catch when it comes to the Ondo token itself. Right now, less than half of the total 10 billion token supply is actually circulating in the market, meaning over 51% of all Ondo that will ever exist is locked up tight. That is a gigantic supply overhang just sitting there. And to make matters trickier, what does holding the token actually get you? Right now, just voting rights. The protocol is raking in over $27,000 in daily fees from its operations, but absolutely none of that yield flows back to the token holders. It's a classic crypto dilemma, right? An incredibly successful protocol attached to a token that's strictly used for governance. Which brings us to Section 5, the 2026 token cliff. This is the looming threat everyone's watching. We are talking about 1.9 billion tokens scheduled to unlock. That represents nearly 20% of the entire supply, preparing to flood the market all at once. For anyone holding or looking to invest, this is the literal elephant in the room. Let's map out this timeline because it is incredibly actionable. While there's a points program snapshot on the radar for April 2026, the monumental, earth-shaking event is that January 2026 unlock. If the market doesn't have the massive demand required to absorb nearly 2 billion new tokens from insiders and early investors, we could see some brutal sell-side pressure. And honestly, the market is already getting jittery about this structural reality. Just recently, a highly secure project-associated multi-sig wallet suddenly transferred around 328 million OND, that's roughly $98 million, straight to exchanges. When you see massive insider wallets moving that kind of volume, it sparks serious fears of an early sell-off and major price volatility. So, Section 6, the bull versus bear outlook. Where exactly do we go from here? The tension here is absolutely palpable. The ultimate bull case hinges on regulatory wins, smashing that $10 billion TVL milestone, and crucially, passing a governance vote to flip the fee switch and finally share revenues. But man, the bear case is heavy. That January unlock could crush the price faster than demand can keep up, especially if global interest rate cuts end up squashing the very treasury yields that make Ondo's products so appealing. A lot of sharp analysts sum it up perfectly. Ondo is arguably one of the best-positioned protocols in all of crypto right now. You've got this brilliant, industry-leading infrastructure successfully merging Wall Street with Web3, but the native token economics, they just haven't caught up to the protocol's success yet. So as traditional finance continues its relentless march onto the blockchain, it leaves us with the ultimate question. Will Ondo's massive institutional dominance eventually reward the people holding its token? Or will the sheer crushing weight of those 2026 unlocks prove to be a bridge too far? Keep a very close eye on those unlock dates, folks, because they might just dictate the future of the entire RWA sector.